this video, let's explore the high minus low, also known as, believe it or not, HML. High minus low. Very simple and yet useful volatility indicator that comes to help us, the traders, understand when we are in volatile market conditions, volatility expands, and bigger moves on the market, or when we have lower volatility, when we could enter possible consolidation, right? So first of all, where is this indicator? We go to the indicator section, other, and high minus low. The HML is right here. You can, of course, predefine your settings of your choices, headlines, visibility, and so on. And once you click it, here is the indicator. So you will see it on the bottom. What does this indicator mean? As the name suggests, this is the pure formula, high minus low. For example, take a look on this candle. Okay? High minus low of this candle, and that's the read which you will get, about 200 points. Red candle, high minus low, and as the read you will get about 264 points. Okay, so that's what this indicator does. How does it help us, the traders? So once again, it comes to show when the volatility increases or when the volatility decreases. It could help us understanding when the momentum is gained, and you can join a trend, see reversal, confirm breakouts with this indicator. But very important thing to mention here, this indicator is not directional indicator. It doesn't come to try and help you to understand direction like the moving average, the MACD, the RSI, and so on. It comes to help simply with understanding what market phase you are at, what are the current conditions at the market, where is the momentum. You can also, of course, compare momentums in different time frames. So it's not directional indicator, and for that, it could be best combined with trend indicators that help you to spot the trends and then join forces of these indicators and find the best timing to enter. So let's take a look on these different phases. As you can see here, increased volatility. You can also see how big these candles compared to the previous candles. Increased volatility, something happens in the market. It could confirm breakouts. It could help you to understand when the money flow is back in the market. And understand, is it good time to actually join the market? And also in quiet periods, for example, like here, you would see the volatility dances on the very low values. It doesn't do anything. No increases compared to the previous highs. It basically does nothing. Now, the way I personally love working with that, as I mentioned before, you can combine that with trend indicators or momentum indicators. But I also love to do it in a simple way. For example, if you are in a bullish market, pure read on the chart. Are you currently having higher highs, higher lows? If the answer is you have higher highs, higher lows, which is usually bullish market you are at, look for the increasing higher highs, higher lows on the indicator. That could be a great indication that buyers are actually looking to step in. And when you are in a bearish market, when you have a sequence of lower highs, lower lows, look for this increasing volatility in the bearish direction, which usually indicates that the sellers are taking the control. Want to learn more indicators? Want to learn more trading tricks? Make sure you follow this channel.